Hello, welcome everyone to this webinar, Venture Philanthropy and Social Impact Investment, Practical Cases from Europe and Latin America. So we organized this webinar together with Latimpacto, so it's a Latimpacto and the VPA webinar. And the purpose of this webinar is to launch the translations in Spanish and in Portuguese of the EVPA Venture Philanthropy and Social Investment Practical Guide, and also to illustrate two cases from Europe and two cases from Latin America of venture philanthropists and investors for impact. I am Alessia Gianoncelli, the head of the Knowledge Center at EVPA, and today I will be moderating and host this meeting together with Carolina Suarez, who is the CEO of our sister organization Latimpacto. And today we have with us 4 speakers, so our practical cases for today. So I'm happy to have with me today Olivier Deguerre from Fitrust in France, Peter Oslander from Sherpa and SI2 Fund from Belgium, Natalia Leme from Arimax Foundation from Brazil, and Pedro Castillo from Promotora Social Mexico. Before diving into the topic of today's webinar, I would like to address few housekeeping rules. So, as you can see on the slide, you will be able to open or hide your control panel, which is the things that you see on your screen. And what is important to know is that using this control panel, you will be able to write questions for our speakers, for our panelists. We will have 2 different moments during the webinar in which we can address your questions to the panelists. So don't forget to start writing your questions there in the chat box, and don't forget to mention to whom you would like to address your questions, so we can manage the Q&A part. Then, since the number of participants in this webinar is very high, and I'm very happy to see all these people connected today with us, everyone is muted. The session is recorded, so you will be able to access the recording, but also the presentation in the coming weeks on the EVPA website. And last but not least, in case you encounter any technical issues during the webinar, you can send an email to my colleague Arnau Picon. You can see the email here on the screen. Then, in terms of the agenda of today, after this short moment, this short welcome, I will give the floor to Carolina to do an introduction on Latimpacto and our global network. Then I will briefly go through the guide, so you will be able to see what are the elements included in this guide that you can always download from our website, including the translations. Then we will have these 2 practical examples from Europe, so Olivier and Peter will present in 10 minutes their organizations. Then we will have 15 minutes for Q&A. Again, start writing your questions when you listen to the speakers, so we can then ask them the questions. Then we will have other 2 practical cases, so Natalia and Pedro will explain us a little bit more about their organizations. Another 15-minute section for the Q&A, and then Carolina will conclude this webinar. We will stay together 1 hour and a half today, but now without further ado, I'm happy to give the floor to Carolina so she can introduce properly the webinar and explain who we are and what we do together. Carolina, the floor is yours.
Thank you, Alessia. Buenos dias, bom dia, good morning or afternoon, depending on where you are connected. My name is Carolina Suarez. I am the CEO of Latimpacto, the newly established Latin American network of venture philanthropists and social investors. We are proud to be here with us, with you, with our sister network, the European Venture Philanthropy Network, EVPA. And as Alessia mentioned, we want to give you a warm virtual welcome to this webinar in which we are launching the translation of the Venture Philanthropy and Social Investment Guide into Spanish and Portuguese. This is the second EVPA report that we launched in Spanish and Portuguese. The first one was the Impact Strategies report that we also invite you to read, and that is available at the webpage of EVPA and soon in our Latin Impacto webpage once we launch it. We're working on that. These translations and the webinar that we are committing today with EVPA are part of our first efforts we're leading for Latin Impacto. And I'm sure that for some of you, it's the first time that you listen about us, Latin Impacto. But please let me share with you that it is the NACE network that we are formally started at the beginning of this year with the leadership of distinguished leaders from the social investment sector across Latin America, and with the support of the International Venture Philanthropy Center. Just to mention that after 2 years of due diligence, we launched this network following the role models of our sister networks in Europe, EVPA, and Asia, EVPN, and also the one in Africa. In that Impacto as a community of philanthropists and social investors who are connecting, mobilizing capital, human, intellectual and financial capital, committed to achieving more and lasting positive social and environmental impact by promoting the exchange of knowledge on the most innovative and effective models of social investment, management, and impact measurement by facilitating connections for greater collaboration and co-investment. For us, the guide that we are presenting today in Spanish and Portuguese is particularly important because it is part of our commitment to disseminate the approach of venture philanthropy as a practice to reach more social and environmental impact. And I'm sure that the experiences that we will listen today will help us to understand better the relevance of the contents of the concept of venture philanthropy and investment for impact in practice. Next slide, please, Alicia. It's just to let you know that the network that we are creating in Latin America, this network meets the same guiding principles of our sister networks, as we see in this slide. But please let me focus on the three that I found critical for understanding better our purpose. So next slide, please. And we will share this presentation with you. So first, as a unique network in Latin America, we gather a diversity type of investors, breaking down silos and encouraging collaboration across them, as you see here. So we are building a vibrant and high impact social investment community across Latin America to improve the effectiveness of our members along the region. You can see here that we are working with different parts of the ecosystem, all of them providers of capital. As I mentioned before, we understand capital, including human, intellectual, and financial capital. The next one, please. As a network in Latin America, we aim to support the social ecosystem through the continuum of capital, the same as our sister networks in Asia and Europe. And we're looking forward to leveraging a range of investment practices from philanthropic grants to the full market rate return impact investment, including talent and intellectual capital. We understand that investors can leverage its practices through supporting the needs of social purpose organizations at different growth stages and to structure their portfolio for maximum impact. Therefore, this spectrum we are seeing here is one of our guiding principles, where we understand the importance of improving the investment for impact approach that Alicia will explain later in detail. Finally, the next one, please. But not least significant, as I mentioned before, we are an independent network as our sister network, but we are part of a global movement. So we connect to the largest community of global social investors. Our networks in Asia and Europe and Africa, they have more than 1,000 organizations, and we hope to engage them with the Latin American community that we are creating right now. So it is just a quick overview of our network. The next, please. You can see that we are building our Latin Impacto network as a platform to collaborate with existing ecosystem players to fill the gap that we see in our region. And I'm sure that the webinar we will have today will give us a better understanding of the venture philanthropy concept and the investing for impact approach that EVPA is promoting. So I am feel very privileged and proud to be here with you today with two of the most important leaders in Europe, pioneers of the venture philanthropy approach, such as Pierre Ostlander and Olivier Gar. Thank you very much for participating in this webinar that as part of our launching efforts. And we also have Pedro Castillo and Natalia Lemen, and both represent two organizations in Latin America that have started leading the venture philanthropy approach as a way to generate more social impact and environmental impact. So now, thank you, Alessia, once again, and the floor is yours. Alessia?
Thank you. Yes.
Thank you.
So thank you so much, Carolina. So now, as I was telling you earlier, I will give you a brief introduction to what you can find in this guide. So here on the slide, you can see the cover basically, and it's important for you to know that this guide gives really an overview of all the key practices and activities of investors applying the venture philanthropy approach. So I will refer throughout my presentation to Investors for Impact or venture philanthropy organizations. So basically, as EVPA, but also as Latinpacto, we refer to investors that are really taking the solution and the problem at the core of their investment strategies, that they provide high risk and long-term support, and that can apply this venture philanthropy approach that for us, it's really linked to giving tailored financial support, couple it with non-financial support also, and having a strong focus on measuring and managing the social impact created and expected. Then, of course, this guide is for us the point of reference for introducing the concept of venture philanthropy and social investment to newcomers, or also to organizations that are exploring the possibility to join our space. So for us, it's really a practical guide in which you can find all the tips useful to understand whether you want to start being part of this space. The edition that has been translated was the one that we realized in 2018, but it was already the 4th edition. So just to give you an idea, the first working paper was put together 10 years before, so really in 2008 when EVPA has just started. And then, of course, throughout the years, we were updating a little bit the concepts, putting new cases, new data. So we had also a 2nd edition in 2010 and then also in 2016. And of course, this guide includes all the insights and knowledge that we were able to gather throughout the years, thanks to the multiple exchanges that as EVPA we have with our members and with the practitioners part of the space. And again, you will be able to find also the data and all the frameworks that we have developed as EVPA. And there are frameworks on how to measure and managing the impacts, on how to provide non-financial support, and also on how to better tailor the financial offer if you are an Investors for Impact venture philanthropy organization. Then you will be able to find 3 sections in the guide. I'm going through all of them in a minute. There is the first part in which you will find more about how to set up a venture philanthropy organization. There will be a focus, there is a focus on the investment strategy and on the investment process. And what is also important is to say that there are practical cases. So today I will not take too much time to go through the content of the guide, but we are using practical cases, as Carolina was saying. So we believe that the force and the strength of our networks is really take our members as an example to inspire the others. And again, thanks to Latin Impact and this collaboration, we have now available also the translation in Portuguese and Spanish. Again, you will be able to download them on our website. Then just to give you an idea of what you can find in the first part, in the setting up a venture philanthropy organization, you will have information on how to start thinking about the funding model. So in terms of what kind of instruments, financial instruments you would like to provide. So it's grant, but not just grants. You can also, as an investor, start thinking on how to use loans, equity, and hybrid financial instruments. Then you should start reflecting on the organizational structure that you want to put in place, looking at, for example, the background of the team, assuring to have a good balance between the investment sector and the social sector. And also you need to reflect on the role that you would like to give to your board. And then there is also a part on fundraising in which there is an explanation on how to consider all the different sources the capital you need might come from. So it might be own endowment in case of foundations, corporations, or individuals, institutional investor, etc. And then there will be a second part in this report with a focus on the investment strategies. Here, all the elements linked to the investment strategies are tackled and well explained. For example, the investment focus, it's very important for a venture philanthropist, investors for impact, to choose the sector and the geography in which he would like to be active. Then, of course, extremely important to reflect on the type of social purpose organizations to support, looking at the legal structure. Our members, our core members, can support non-profit organizations, but also social enterprises and also traditional businesses with intentional social impact. Then, of course, you should look at the model, at the business model, because then you can really see what kind of financial support it's important to provide, at which stage of development. So again, our core members are really those that are taking all these considerations into account while deciding whether investing or not. So the concept of tailored financing. And then there is also something related to all the non-financial support services that Investors for Impact venture philanthropists can provide to the social purpose organizations in order to strengthen their social impact related skills, giving them help for building a theory of change and impact strategy, or with impact measurement and management. They can provide services in order to strengthen the financial sustainability of the social purpose organizations, looking at tips on fundraising, revenue strategies, financial management, and finally also non-financial support provided in order to strengthen the organizational resilience of these organizations, providing non-financial support in human capital and governance. Then, of course, what is extremely important for our investors is also to start thinking about the co-investment policy, to see whether there are complementary actors that can join them in this investing for impact journey, to join forces for non-financial support, but also expertise and different skills. And then, of course, what is very important, and we highlight this in the guide, is that it's better for Investors for Impact to start making considerations regarding the exit strategies earlier in the process, already in the investment strategies, to have all the scenarios clear in mind and to then take the best exit strategy for sustaining the social impact created. Last section is focused on the investment process. So as you can see here on the slide, after the investment strategies, there is all the investment process phases. So I'm just going to quickly tell you what they are about, and then we will be using our experts and our practitioners to explain a little bit how it works in practice. So the first phase is the deal screening, which is really the first step in which an investor for impact starts preliminary screening the investments possibilities that are available. Sometimes they do this proactively, so they look for investments. Other time they have a call for proposal on their website, and they receive the applications and they screen them, and they start excluding those that are not meeting the criteria. Then there is the due diligence, which is basically a more in-depth screening process in which there is a great analysis of the business plan and also the business model of the social purpose organization that would like to receive the investment. And then we are going into the deal structuring. So once the investor for impact decide to invest, it starts structuring the deal together with the social purpose organization. Again, I'm stressing this point. There is really a high connection and high engaged link between the investor and the investee. So everything it's really made together in between the investors and the investee. This dealing structuring phase includes preparing the non-financial support plan, understanding which is the best financial instrument to use, and of course, in case the organization can use more than one financial instrument, the choice is greater. So, I mean, it's really a matter of well assessing the different characteristics of the social purpose organizations to understand what instruments can best suit the needs, and then discuss the exit plan. Again, important focus on exit already during the deal structuring. Investment management, the phase where the investment is actually managed, and of course in the guide you can find different insights looking at portfolio level and the investee level. And then final phase included in the report and final phase of the investment process is the actual exit. So again, after having previously assessed the different exit possibilities, the venture philanthropy organization executes the exit, choosing whom to exit to, so the follow-on investors. And what it's important to assess here, to understand, is how to balance the return and the social impact, the financial return and the social impact return expectations, because these lead to different considerations in terms of potential organizations to exit to. Finally, and this is after the investment process, so after the exit, what is important to highlight is that Investors for Impact venture philanthropists continue to provide non-financial support even after the investment phase. Some examples might be they provide access to networks even after the actual investment. They help SPO, social purpose organization, to look for follow-on investors in order to sustain the social impact created and to be able to really support the SPO even after the investment has been closed. And in certain cases, in case of equity, there is also the possibility to keep a seat on the board. I'll stop here. You will find lots of examples and lots of graphs, frameworks, data in the guide itself, downloadable from our website. But now I would like to have our speakers telling us how they practice it, how they act in practice, and I asked them to focus on the 3 core practices of venture philanthropy. So we will start with Olivier Deguerre presenting us FITrust, focusing on how they deal with their financial instruments and financial return expectations, how they do non-financial support, and how they measure and manage impact. The same will be with Peter Oslander, and then we will have the first Q&A session. Don't forget to write your questions and to indicate the speakers you would like to address this question to. So without further ado, I will give the floor to Olivier.
Hello.
Voilà.
Buenos dias. Thank you very much for giving me the opportunity to present what we have developed in the last 15 years. It's a path, it's a walking path, and we've learned on the last 15 years many things that we didn't expect. And I'm going to try to do in 10 minutes a sort of summary of what we've done. Next slide, please. Okay, maybe our history. I've worked in finance during 20 years before I tried to look to do something else, and I met with Ashoka, which was launching in France and Europe in 2005, and we realized that social entrepreneurs, we didn't know that they would exist first at the time, but that they would need capital to develop their business, and that classical fund and foundation will not provide it. So we launched a foundation in 2006 to support and mentor social entrepreneurs, and very quickly we discovered that a certain number of those social projects were looking for capital, and that foundation in France were impossible to fund that. So we structured a social investment fund, Trust Partenaire, and as I came from finance, we decided to apply private equity philosophy to support those not-for-profit and for-profit ones. And we met EVPA and the founders of EVPA at that time, 2005, 2006, and we realized that what we have done in the past would clearly apply to those social entrepreneurs, and we decided to adopt this philosophy and the EVPA vision because we're convinced that we had to reinvent the way social organizations were financed and mentored. That means that we have reinvented the way we look at projects, we fund them, we support them, we help them, and we get out, as has been explained in the previous slides, which is really we pass step by step, we learn how to work differently. Our vision is impact first. That means that we aim at social mission, and that economic sustainability is a mean to develop impact. So when we look at a due diligence, for example, at a project, we look first at the social impact. Then we're going to look at the team, and then afterward at the business plan. Without social mission, without a team, business plan doesn't work. It will not work. So it's very important for us to put this social impact at the forefront of our strategy. It obliges us to change the way we develop capital in those organizations. For example, when you are investing in small organizations, it's impossible if you put all the money in the capital, you have 100% of the capital, and there is no one else available. For example, we helped a small NGO in the south of France, which was putting people back to work in 2006. They were doing 3 million revenues from putting people to work in very large corporates. They had a very interesting business plan with methodology. We decided to help them to structure the social organization company, and we put capital in it, but we just wanted to have 25% of the capital, so we put a lot of money in terms of loans. And if I take a 14 years pass, now they're doing 50 million euros revenue, they have 1 million net result after tax, and they employ 1,500 people that are going to get out of job every 2 years because it's a way to put people back to work. So, but to do that, we had totally to change the way we mentored them. We decided to have a very close mentoring. We had a chance to have 25 CEO, ex-CEOs of medium, large organizations, classical organizations, that are investor in our fund, and that are going in the board of those small organizations and bring them all what they know about how to develop a company, how to accelerate, how to manage it when you are in risk in the COVID risk today. So it's a very strong support for us. And then we have developed our own tool for measuring impact. We developed a philosophy that European Investment Fund uses today, that I will explain later. And it was very important to say to everyone, but mainly to the social entrepreneur, why do you use impact? Can I have the next slide? So we were the first private investor fund invested in social organization. We are the French USEF, European Social Investment Fund, which is for the EU group, make a standard for this type of funds. We have today invested 50 million euros in social organization, mainly in France, but also in Europe, but also in Africa and Southeast Asia, because we are convinced that social innovation is no longer geographic, but worldwide, and that you can take some innovation from another country and bring it to your own country. We have been in young projects, some startups, but mostly in accelerating ones, people that had the project working well and wanted to accelerate. And we are very often in hybrid models with a not-for-profit and for-profit organization, because when you deal with very social issues, you cannot do it just for profit. You must mix, I would say, not-for-profit and for-profit organization. It's long-term investment. We assume since the beginning that investment will be long-term, because it's very difficult to manage ambitions, which is social and sustainability, in 3-5 years. So we are a company, not a fund, with no end date at the beginning. Our investments today, we have them for 11 years, medium, so it's long-term investment, it's not 5-6 years. And we have organized liquidity for 2026, 20 years after the beginning. But my grand surprise, most investors want to continue. It's a low risk, low return strategy. We thought at first that those projects would be very risky. And we thought at the beginning of the COVID that it would be very risky. Unfortunately, as the market is growing and social issues are more and more important, it's not so risky. And we discovered that our risk was very low, 4 failures in 15 years with 37 projects, that our expected return was low, 3, 4, maybe 5, but certainly not 7 or 8%, mainly because we're focusing on social projects. Next slide, please. Provide non-financial support. It's a key issue. You cannot bring those small organizations to, I would say, to scale or even to exist if you don't have people around them helping them to develop their strategy, because you cannot manage classical company risk and at the same time a social risk. It's a very, very high, tough challenge. So, as they have to deliver impact and be sustainable, non-financial support is key, and it's also a way to lower the risk. We do believe that we have lowered our risk because of this financial support. We have 14 entrepreneurs, which are investors in our fund. We have 60% private, which participate actively in the investment committee. We have 6 of them which are in, I would say, consultant aside, and most of them are in the board of our investees. It's always strategical support. We can call for specific experts. It's always pro bono. We never paid for that. And in those organizations, they really participate actively, even when after we are out, as has been said earlier. We organize every year, at least once, but 2 or 3 times a year, meeting between our VC investors to create networks. Because in fact, we realize that our investors have very interesting networks that those social enterprises didn't know. That bringing them together will bring them sales, expertise, way of developing things that we didn't expect. And we've done that with private investors, but also with very large organizations like Schneider Electric, like Danone, like Engie, like Essilor-Luxottica, which are very, very large corporates. And we have structured very interesting work with them. And main issue is the cost of mentoring, which is not covered by external funding. And the chance we had is that from the beginning, we decided pro bono support, and entrepreneurs are very happy to help, and they bring strategical value to social entrepreneurs. It's a very important issue. If we talk of social impact measurement, next slide. Measuring impact. It's a very, very long process. We looked at many different tools in 15 years, and finally we built our own referential because we didn't found a simple and effective methodology. Small organizations cannot support long impact expertise from outside or deliver tons of objectives for the sake of investors, because investors look for that. Those small organizations, they have no team, they are not the size for that. We discovered, walking by walking, that impact objectives are the heart of their mission. So it's a strategic tool for the CEO and for the board to pilot the organization. So during due diligence process, before investment, we ask the organization to define 3 5-year objectives. Those objectives are looked annually and discussed between boards. They can be revised if there is any reason to do so. And now one of our main investors, European Investment Fund, uses the same methodology, and he has decided to put a carried interest, which will be based on the realization of these impact objectives. And our team decided to give him to our foundation, because we do believe that if there is any carried interest, it's because those organizations had been run very well because of the team, and it was not us. So it's the reason why we put it in our foundation. I think there is a next slide, because there was a question on. No, but there was a question just to finalize. What we've learned in a few years, first, we've learned that it's long-term process. Second, we've learned that there is a lot of resilience. Most of our has been said in a conference in EVP in Warsaw a few years ago by other funds. Most of the projects that are very successful today had a lot of problems a few years ago. If we had been classical financial investor, we would have said we stop. We're not going to put more money. It's too risky. We're going to lose money. Because there was impact issues, social issues, handicapped people working, people very far from job, etc. We decided to continue and to help and to find a way to help them to restructure, reorganize, and be successful. And 95% of the time it worked, but it took 10 years, or 8 years, or 11 years. It didn't, not 3-5 years. And it was, I think it's the main lesson we've learned, which means that even if there is an issue, we can, because there is a social mission, we can always look a way to finance differently, work differently, reorganize the organization. And 95% of the time it worked. And I think it's our main proud today, is to have been able to do that. And we hope that you will have the chance to do it in Latin America, because I'm sure there is a lot of things to do. And to finalize, there has been a question of COVID. We made a long trip in the last months to analyze our company within COVID, except that there has been many help from EU government, French government, Italian government, Spanish, etc., to help those organizations. We've been very surprised by the resilience of those organizations to find ways to pass this very difficult crisis, and we're sure that they will be continued to be there, and we're going to raise a new fund in order to help them to do so. Well, thank you very much, and if there is any question, I'd be very happy to answer.
Thank you so much, Olivier, for the presentation and the quick overview. Now I give the floor to Peter to do the same, to inspire us a bit with the story of how everything started for him. So, Peter, the floor is yours.
Thank you, Alessia. Hello to everyone. Thank you for the opportunity to present SI2 at the start of Let Impact. My background is in accounting and auditing. I've been in professional auditing and in finance positions for multiple years in companies. I got into the impact investing space in 2004. When the same year when that EVPA was started, so I got involved quite quickly. And since then I've been working on impact investments, and then since 2015 actually with SI2 Fund. SI2 Fund is a 4 impact fund. We have a focus on impact first, so to say. The DNA is first and foremost to create an impact, and secondly with a fair financial return. SI2 Fund was started in 2012 as the first impact fund in the Benelux, in Belgium, the Netherlands, and Luxembourg. Not as early as Phitrust, but for this Nordic part of Europe, we were definitely the first to start. And the idea was to back social businesses that have innovations to solve or to help address societal challenges. And the idea is to help them grow from early stage to a more stronger organization where they can be either independent or be taken over by investors or organizations that can take them even further. Scaling system-changing innovations is what SI2 likes to do. For that, I think our model is slightly more to the profit side than Phitrust. We are looking for companies that are able to generate a return that can be distributed. And in a bit of a shorter term, our expectation is, or our average is also longer than regular VC, but more like 6 to 8 years of accompanying. Apart from supporting social businesses, our goal was also to allow investors to connect with social change and with these social enterprises. And the investors, the shareholders of SI2, are mainly families, high net worth individuals, and foundations in Belgium and the Netherlands. The fund size is a bit modest. It's 17 million. At that time, it was significant for an impact investment fund, and we are a closed-end fund, meaning that the fund has a starting time and also has a defined ending time, and we have to exit the companies that we have invested in and that we are supporting before the closing date of the fund. Yeah, you can now move to the next slide, Alessia. Yeah, first about the financial support, because we don't do a lot without a financial link to those organizations. Our instruments, the instrument that we use, the financial instruments, are equity and loans. We know that we are potentially at risk for the full amount of our investment because we are investing early stage and with relatively high risk companies, and we need also an uncapped upside potential if that is available, but only if and then. We try to tailor, no, we don't try, we actually tailor the financial support to the need of the social business. If that need doesn't fit with what SI2's funding model is, then we cannot actually support, and we need to refer them to other funders that have the proper financial instruments that fit. Well, the average ticket size is about 250,000 to 1.5 million, no more than 10% of the fund size. That is the maximum. And there is no real minimum, but below 250,000 euros, it becomes less efficient. It is already very inefficient. There is a lot of work related to the investments, the coaching, the monitoring, the helping with impact, maximization, etc., which needs to come, in our case, from the management fee. There is, for SI2, there is no such thing as a pot of grant money for or pro bono support. We need to cover the coaching costs from the fund management fee. Yeah, we can move to the next slide. So the second thing, and maybe in many cases more important than the financial support, is the non-financial support. As an investor, and in line with the VC model and also what is needed, we give active support. In all of the ventures, we will have either a board member from our team, or there is another way that we structure, depending on the legal structure. There might be another way where we structure the engagement. Apart from our own team that provides active guidance and hands-on support, we link with our networks, our shareholders that are willing to help, and other parties that on a case-by-case basis, tailored to the needs, are connected. Yeah, I think it's important here that what we provide in financial support is, or in non-financial support, is is tailored to what the social business needs are. So we don't have a template as some investors do of how companies are helped. It is really dependent case by case. Every case is different. That is what we see. One thing that we always do is help them with impact measurement and management, because that is at the heart of what they do. But many struggle in tracking that or managing that in a systemic and proper way. So the next slide is a bit deeper on measuring impact. The why is, of course, because the social added value that our companies are able to create, that's our reason for investing. So it's very important that they stay on track and that they actually reach their goals. And if they don't, or if they drift away, reasons for us to exit the investment. But it's actually not happened. The teams that we have invested in are all dedicated to creating societal impact. But it may be that in the course of a development of a business, the idea of what or how to create the best impact changes. We see impact measurement as business intelligence, something that is not done for the benefit of the investor, but something which is done for the benefit of the social business. The better the social business understands what impact they make and on their stakeholder groups, the better they can model, adjust their business. And our experience is that better impact or better tailored approach usually gives a better business as well. For measuring, we use social return on investment as a method, as a measurement or analysis methodology within the framework of the Impact Management Project, which is a global effort to standardize impact management globally, and which works with a couple of indicators, with 5 indicators which we track and which are all also part of the SRI methodology. The advantage of that methodology is that it is bottom-up. It doesn't tell people what the key impact indicators are or what way the measuring should go. It is a framework of analyzing their own impact map, their own the impact value drivers that are part of their business, and to define the key indicators bottom-up of what needs to be tracked. For the fund, on the fund level, the target for us is a social return on investment in excess of 2, meaning that the value of the social added value that is created by the organization is at least more than twice the input that needs to be that is involved in generating the social return. And from our last year's impact report on SI2, it shows that the impact currently, we don't have a full picture on the portfolio yet, but the companies that are tracking their impact in the right way, they are well above, the combination is well above an SRI of 2. It allows us to see how this develops. And the second link that is interesting here, and may be interesting for you in Latin America as well, is that this allows us to identify in what SDGs, Sustainable Development Goals, the impact of our companies is, and to map how that looks. And as you see, the the majority of the impact of our portfolio companies is in health and well-being, SDGs 3. But when we progress and bring in more of the companies into this methodology, that is probably going to shift. On COVID-19, remaining question to be maybe answered. I was very much my answer is very much in line with what Olivier just said. We were surprised when doing our review of the portfolio and how they are impacted by the pandemic. We were surprised by the resilience. Actually, out of our portfolio of 7 companies, 5 of them are doing well, are actually seeing increased activity and increased revenues for their products and services, and only 2 have a bit of a problem. Probably only 1 needs financial support, but that isn't even sure. And as an investor, this would be our first focus, of course, to help our current portfolio companies through this crisis. Thank you. That's it. I'm open to questions.
Thank you, Peter. Thank you, Olivier. So actually, we are running a little bit out of time, but you already answered a bit looking at COVID, emergency, resilience of the organizations that you support. So I have a question from the audience for both of you. So I will start with Olivier, and then Peter, you can continue and share your experience. And then I think that again, we won't be able to answer all the questions during this session, but we are gathering the questions, and we will try to follow up with everyone. So far, many interesting questions, but now I would like to know from you both if you can give us some examples of issues, areas that the enterprises, the social enterprises that you support addressed, and also if there are areas, social sectors in which you would be interested, but you were not able to find the right social purpose organization to support in that sector. So I'll give the floor to Olivier. Hopefully the question was clear enough, and then Peter, you can also answer this question. Olivier. Yes, I think you are muted, Olivier, but I
you hear me now?
Yes, perfect. Thank you.
Yeah. Sorry, I'm going to answer to the second question first.
Yeah.
Do we have problem of deal flow in some, I would say, sectors or others? We never had any problem of deal flow. Never, never, never. If you accept risk, there is millions of projects worldwide and millions of projects in Latin America that are going to try to solve social issues. And unfortunately, social markets is growing. Social issues are much higher than a few years ago, and it will continue with the COVID issues. So my feeling is that there is no problem of I would say deal flow. It's a problem of do we as investors accept to take a very high risk to solve a social issue, and how are we going to solve it? So that's my answer. We've got many issues. I'm going just to tell you an issue which is a COVID issue, which came from 2 companies with support, one in France, the second in Spain, which is in France, it's a company called Ecoder, which is restructuring all computers with handicapped people. So it's all our old computers that are restructured in a brand new one, which is going to sell second-hand to people that cannot pay or buy a computer. We structured that, we were in this company 12 years ago, we're now still in. It's an NGO and a for-profit company. We've got 120 people and 100 handicapped people working in the company in France, in different sites. The COVID stopped all the company, and they never had so much sales to do. And the main issue was to convince those handicapped people to come back to work, and most of them didn't want to do it. exactly the same issue in Spain, where we are in Madrid and Barcelona in a company called Koiki, which is doing last kilometer delivery from DHL, Amazon, very large, etc. It's one handicapped people which is going to bring it to your home at the time you want. So there is a very strong link between the people receiving the packet and the handicap that come every time. Exactly the same with the crisis, an enormous demand and very difficult to convince those handicapped people to come and visit even with masks, etc., and to deliver the parcels. So here are two issues that we had to deal in the last months with those two companies, how to help them to think ways to organize and to answer the issue that even in the crisis there are enormous sales.
Thank you, Olivier. Peter, you want to complement?
Yeah, on deal flow, I think we have a bit of a focus. We started with SI2 very broad, without any theme. In the course of years, we have started to focus on people topics. So we do not actually invest in climate change topics. There is a lot of deal flow there as well, but usually very capital intensive and also at the edge very often of where regular investors can invest. So we focus more on people topics. Not really short of deal flow. I agree with Olivier there. We are seeing about 300 deals a year potentially, but we select only 1 or 2, maybe 3 out of those. So we need to be very selective as we are looking for a combination of high impact and a reasonable financial return. An area where we, as with your question, Alessia, an area or sector where we would be interested and don't find a lot of leads is education. This is an area where innovation can take place and should take place quite a bit, but we haven't, and we have seen various leads, but we have not found a real good innovation with also a proper business model. So the combination that we are looking for there hasn't shown up yet. But sometimes, and that is the funny thing of this work, sometimes you find very unexpected things like, for instance, our last but one investment is in a company that helps people that are not connected to the internet, helps them to and teaches them how to do digital connection and how to make the proper use of the internet and actually help them to be included in society, as many things go online nowadays, at least in Europe. And this is a topic that we would expect to be a grant topic, basically. But there is an entrepreneur who found a business model to make this work and even do it profitably. So you always get surprised by the ideas and the innovations, and also innovation in business model that you can find.
Thank you both. I think that's it's time to close now, but we received lots of interesting questions. So again, we are following up with you. We will inform our speakers. Thank you so much, Olivier and Peter, for giving us this great intro on the work that you are doing for ages now. So I'm happy now to move forward and to start talking about cases in Latin America. So Natalia, I know that you are back, so please take the floor and just give the presentation.
Thank you, Alessia. Thank you, Carolina, for inviting Arimax and I to talk a little bit about impact and venture philanthropy in Latin America. So you can move for the next slide, please. Arimax is a family foundation that supports initiatives to promote the productive inclusion of people in economic vulnerability in Brazil, aimed to generating work and income and increasing productive in Brazil. We have a tariff change that I couldn't show here because it's big and we have only 10 minutes for that, but the purpose of our tariff change is to impact economically vulnerable population in Brazil with stable and lasting access to work and income. For this, we seek three impacts, that is health enterprises that generate jobs and income, vulnerable people better qualified and with greater access to employment, and more investments and more mechanisms to support productive inclusion initiatives. We did a huge study about productive inclusion here in Brazil, and we saw that areas that have more evidences for great impact in productive inclusion are the how do you qualify people and connect them with employment, with jobs, and the other one is how we have more entrepreneurs in Brazil, especially in poor areas in Brazil. And the other one is how we can improve the rural entrepreneurship in Brazil, in the rural areas. So we are focused on these three big areas as a grant maker organization. Next slide, please. So here are our guidelines for our operation, and you see that most of them are connected with what Alexia and Carolina said that are in the guide for venture philanthropy. We are happy to say that we have many guidelines that are connected and that answer venture philanthropy questions. So I will just talk about a few of them here. Of course, we support initiatives in which we recognize effective potential for impact. And for us, it's very important to support initiatives that reach scale and in large populations. But this doesn't mean that the initiative has to start reaching scale. Sometimes we have pilots that demonstrate effect for other players and for us, and they are local, but they have a plan to scale and potential for scale. And we support networks, alliances, and coalitions. We know that the Brazilian social problems are very big and deeply, and nobody will solve this alone. So for us, work with other players is very, very important. So we are all the time trying to do coalitions and co-financement. So for us, it's very important to think and fund together. We consider that it's essential to strengthen players who are already in the field. So we don't implement any initiative, we just support others. And for us, it's very important to produce relevant knowledge and solutions that are supported with good evidence. So we know that the third sector and governments here in Brazil, and I know in other places too, many times take decisions and produce solutions that are more based on what they think that it's the best thing to do, and not with based on evidences of what really works. And this causes a lack of results, overlapping of actions, and we lost a lot of resources. So for us, it's very, very important to always have evidence and work based on knowledge. And because of this, we support research here in Brazil in the productive inclusion field. And the last one, it's monitor and evaluate our actions, because we know that this also helps to produce evidence and helps to have the evidence that this initiative it's producing effective potential for impact. So I will talk a little bit more about this later. And next slide, please. So as I said, Arimax is a grant maker foundation, so we directly support only via donations, grants. We don't have other financial instruments, but we support organizations that promote blended finance. So we don't have the legal instruments to do it directly, but we support organizations that promote blended finance. And we help to mobilize the different players to make grants or to use other financial instruments to compose the capital of the grantees, such as other foundations and companies, and even with the government we talk. So we are talking with all the players all the time. And we think that when we have different players working together is better for the impact of this initiative. So I have here 3 examples. I will not talk about the 3 because of the time, but one example of how we can support blended finance doing only grants is like it's with Nest. Some of you may know Nest. Here in Brazil, we are supporting an initiative in the northeast of Brazil. It's an NGO that is very traditional in the northeast, and they only survive by fundraising. And now we are helping them to build their commercial arm. So they are like, they will start to sell services. And they will not depend only off fundraising and grants. So Arimax gave half of the money by a grant for this process, and Nest complete the other half, but in a credit a loan instrument. So this organization will have to pay back Nest next year, but Arimax, no, we just gave the grant. So in this way, we could do this process with this organization and compose the finance that was needed for this. Another example, it's ANIP. ANIP works with entrepreneurs in the favelas here in São Paulo. So they help people that start that people that want to be entrepreneurs, so they do all the process with them, and they look for the whole process of this new enterprise, new company, and in the end they give credit for them to start their business. So we don't give directly credit for this business, but we give through ANIP that does this project. So just 2 examples to show how a foundation, Grantmaker Foundation, can work with grants, but supporting and promoting blended finance also. Next slide, please. Providing non-financial support. For this is a key premise beyond funding. So it's essential to develop trustful relations with other players in the field and strengthen. For us, we don't want to be a donor that just say what the player that is in the field needs to do and the NGO needs to do. We want to build this together, and we have a permanent institutional support with active listening and dialogue, providing knowledge and tools to our investees. So when we need to adjust some route, we will do it together. We understand and help them when they don't achieve the impact that they were supposed to do, and we help doing connections and network for them. So we want to be seen by partners much more as donors only. And Arimax offer recurring medium to long-term support, because we know that the challenge that we are supposed to solve are big and take time to have sustainable solutions. So we look for medium to long-term support. Next, please. And here, measuring and managing impact for us, this is very, very important. So we have a consulting that built this process for us. So Arimax has 36 KPIs and different instruments for evaluation that were built by this consulting in collaboration, the Arimax team and the grantees. So we understand that it is very important that the grantees see the value of this measuring and managing. So we don't want to just say you have to feel this, but show for them the importance of this to improve their work, to help them to take better decisions. And also it is important to involve them on this, because some instruments have to be tested. They will not work in the first time. It's a work in progress and needs a lot of adjustments in the middle of the way. So it's important to have them on this, giving them their opinion, saying this worked for me, this not. So then you can have a better tool to measure and manage an impact. So we wanna know two things. So the first one is in terms of the quality of the process, how have the grantees performed? And for this, we have questions related to the quality of what is being developed, the use of resources, the fulfillment of agreements, timeline, the production of actions, and etc. And for managing, we want to see which results in productive inclusion have been achieved in the entrepreneurship and employability portfolios. So for this, we have questions related to the effect of the actions in reality, the transformations obtained, the expected and the unforeseen results, and the impacts. So we are developing now an online platform where the grantees will have their access and fill all the informations and all the KPIs. And then this platform will generate the graphics and the information that we need for our board and to have our strategy all the time. And we hope to have in this platform all the information together. And it's a new thing that I expected to show when it's done for those that are interesting, because I think that will help a lot. We are only 4 people at Arimax Foundation. We are a very small team. So this kind of thing helps to give agility and quality of work, and to help us to have a more strategic actuation. So that's it. I hope that I helped a little bit with an example here, how we are using venture philanthropy guidelines to work as a family grant maker foundation, and I'm happy to answer questions.
Thank you so much, Natalia. Perfect, also with timing. And I think that, again, I should remind the audience that there will be the possibility to ask some questions after this presentation of Natalia and now Pedro. So continue to write your inquiries in the chat box, and we will proceed with asking questions to our panelists. Pedro, now I'll give you the floor to present Promotora Social Mexico, and I will mute myself.
Thank you, Alessia. Thank you very much. I'm going to honor my 10 minutes, I promise. So thank you, everyone. Good morning. Thanks so much to Carolina for the invitation and Latin Impacto. After these 2 years of due diligence, we're very happy to have the organization in place. And I think just coming back to Alicia's first note, this practical guide that Impacto is presenting today, I think it's a great contribution because it's going to show the path, I think, the traditional investors and to family offices to do this kind of social investment. So after COVID-19, I think it's going to be very, very, very needed. So the next one, please, Alicia. Thank you. Promotor Social Mexico started, the foundations we started in 1982 after the visit of Mother Teresa to Mexico by a group of friends. And this led to many other events in Mexico. We had a terrible earthquake in 1985 where some of these people got together and organized civil society, something that has never happened before in Mexico, and set up some NGOs in a very early stage NGOs. So one of these NGOs started supplying foods to the poorest states of Mexico, and one of the founders thought that it was a good idea to start lending a little money after the recovery fees of these food supplies, very small recovery fees, and that's how as it says there in 1990, Compartamos started. And then it grew and grew and grew until one day the Mexican government came and said, you know what, you can't lend money unless you're a financial institution because you're an NGO. So this pushed the founders to create a financial institution and to invite some financially traditional investors as the IDB, who is there in the chart, to invest in the origin of Compartamos. And that's how we started. Promotora Social Mexico is one of the founding investors in Compartamos. So to make a very long story short, because as you can see there, this story took like 18 years until in 2007, Compartamos did an IPO, a very successful IPO, and that's how Promotora Social Mexico started to invest in these social initiatives. The next one, please. So since 2009, part of the decisions that we made there, I was already there, was if we should become a major donor as other in Mexico, or if we should start thinking of different ways of social investing. And we decided that based on the success of Cantera of Compartamos, we should focus on doing something more like this, so more business oriented, but at the same time social. So we thought we were the only one in the world doing this, but we soon realized that there were many other impact investors in the world. So this is the theory of change that we're based on. We want to create great social impact, but at the same time sustainable business models. The next one, please. These are the three sectors we have: health, education, and economic development, and more recently, early childhood development, which is now a major priority for us in Promotora Social Mexico. Why these sectors? Because in Mexico we have a lot of need in all of this, so that's why we decided this. So the model, our intervention models goes from financial support to non-financial support, as you can see there, and it's basically on impact investing, strategic philanthropy, and ecosystem building. Those are the three main lines we address every day. And the next one, please. Thank you, Alicia. Going to the portfolio, the investment portfolio, you can find a very detailed description of every company we have invested. We have invested in 24 companies so far, most of them in health and education and economic development, as you can see. And going to a little as my colleagues on how do we do this non-financial support. We become members of the board, of course. We help them a lot on strategy. We help them a lot on fundraising. Some of these companies need to fundraise really frequently, more than we would like. We help them on talent acquisition, which is a major task when you are a startup or SGB. We are now doing an M&A on one of the companies, and we are leading this process as well. We might become temporary CFOs or CEOs. Some of our investment team could have that role for a little time and then leave the company, go by on his own. We help them a lot on government relations. I'm sure in every country, government relations is always a very particular task, and we help them a lot on that. And on the impact measurement, the next one, please. Well, there you can find all the portfolio companies. The next one. And on the impact measurement, what we do, we use gears. The previous one, sorry, Alicia, the previous one. Thank you. On the impact, this is non-for-profits, but I'm gonna go there in a minute. On the impact measurement on for-profits, what we do is we use gears. We started using IRIS many years ago, but we find it a little bit too complicated, too many indicators for the startups to measure. So we decided to go to IRIS, to gears, sorry, and we also developed our own methodology, which is very, very quickly. We select certain indicators. For instance, we have a company that's focused on diabetes, Clínicas del Azúcar. So we select the number of patients, the avoided complications, the number of patients who have a membership, which is the business model they have. And we give each indicator a weight, and we do an average. And if the average is below 50%, we have a red sign. If it's 50 and 80%, we have a yellow sign. And if it's above 80%, we have a green sign. So that way, every quarter, we measure this on all the portfolio companies, and of course, all the financial indicators. No, so that's an impact measurement. Going to the second line, strategic philanthropy. Well, we have supported all these NGOs in Mexico, and we do this in two ways. The first one is we focus on, some of them are doing an excellent job, so we basically perform a due diligence and support them to do more on what they're doing already. And a few grantees really need institutional support, like they would need as well help in organizing their board, fundraising, infrastructure. So we support them directly to provide them with the means so they can deliver they can have a better delivery to their beneficiaries. That's the way we have supported all these NGOs in the chart. The next one, please. Next one, please, Alicia. Thank you. Sorry, the last one. It takes time to change the charts when the one with the circle. The third line, which is ecosystem building, this circle explains the way we think on ecosystem building. The blue bytes, it's knowledge generation, then the orange promoting, the yellow one articulating, the pink one it's supporting, and the green one is financing. So we have initiatives in in all of these stages in Promotora, and we sometimes, if we finance applications, for instance, we're only knowledge generations. If we finance the Latin American Impact Investing Forum that some of you might know, it fits more in promoting social impact bonds, articulating, and financing as well. And intermediaries it's more than supporting side. So we see this all the ecosystem. We partitionate this ecosystem on this chart. The next one, please. I'm running out of time. 2 more minutes. So we have many initiatives like the COMAP, which is like the next one. I'm going to walk very quickly. The COMAP is a collaborative mapping that will be launched very soon, and it has more than 2,000 collaborations interacting all together in Mexico. The next one. The Latin American Impact Investment Forum, I already mentioned, in Monterrey, which is a really large gathering in Monterrey, Mexico. The next one. Alumbra, it's an early childhood development initiative. It's focused on preventing child abuse in the world. The next one. Here we have another one, which is the Pacto por la Primera Infancia. The Infancia is a national pact with the government, with NGOs, with companies to promote children's rights all over Mexico. And we have been able to do public policy here, so the government can adapt their policies to what the Pacto is asking. The next one. Mass Challenge and Sistema B, big corporations. We are part of the founding teams of these initiatives in Mexico. The next one. I'm almost finished. Well, we are part of the NAP, the National Advisory Board on Impact Investing in Mexico. The next one. The next one, the GMAP. These are initiatives we have previously funded. The next one. There you can see the EVPA logo. This was our first approach with the EVPA in 2012 at a meeting there. Next one. We have had participations in the SOCAP. We have done several publications like these ones, mostly focused in entrepreneurship and some other topics like social innovation, public-private partnerships. The next one, early childhood development as well. And finally, you can download a couple of books. We have published one of them on early childhood development. You can download it right on our website. And the next one, if you want to learn more about Promotora Social Mexico, we published a 10-year book. Last year we had 10 years since we started. So you can go a little more in depth in all that I have just mentioned in this book. You can download it on our website. Thank you very much. I'm happy to be here and happy to answer any question.
Thank you. Thank you, Pedro. So I think that we are running out of time, but I would like to ask you a question. We receive again lots of inquiries. We are trying to following up, but maybe since we are in this period and both Olivier and Peter tackled this, I would like to know what is your view on COVID and venture philanthropy. So what do you think is venture philanthropy can do to tackle this emergency, and if you have also a quick example that you can share looking at what you are currently doing. So I will give the floor to Natalia, and then Pedro, you can complement.
Okay, thank you for the question, Alessia. I think that the COVID made some people that wasn't looking for impact to start to look for it. So especially here in Brazil, where the inequality is very big, we have this, more people saw it in television and how more poor people die with the COVID, and more people start to mobilize their companies and their resources for this. So we can have different players working for impact in same cause. So this is the first thing. I have a good example of mobilization that we did here in Brazil. Arimax was part of it. So we did the first relief fund in Brazil. Was based on the American models of relief funds, and is a solution that to create a credit platform with donations and involves a big data filter, and it's composed by credit for the small business, that it's 95% of the business in Brazil are small business. So we offer credit for them, and this credit comes from donations from foundations, companies, and person and people, and it's combined a credit and a free online education about managing sales, things that can help this entrepreneur to use this credit in a better way. So I think this is a good example of how we can mobilize the different types of resources in a same cause to improve and to give credit for a business that needs to survive, and to keep employees, and to keep the economy working here in Brazil. So it's just a small example that I would give to you.
On our side, Alicia, for instance, on the philanthropic side, what we have done is that all the grants we made last year, at the end of last year, and at the beginning of this year, we allow the grantees to decide what was the best use. Instead of fitting to what they said they were going to do, of course, the environment has changed, so we allow them to do whatever they want to do, that they think is best for their needs, their current needs. And on the impact investing side, we are preparing some special credit lines. Several banks in Mexico are closing the credit lines, or are analyzing much more of the lines. So we are giving some credit lines to our investees, and we perform an analysis on each of the companies that has been in the last month on the specific needs that they will be needing in the coming six months or so. So we have a plan for each company. No? We are adapting, and the investment team is now focused on that currently. No, that's and I think the COVID-19, of course, is going to be it's a huge opportunity for all of us to, especially with the government. I think it's a very good point to ask the government to start measuring much better the way they do the social impact on all the programs they have, and the economical return and the economical development on the subsidies they provide. It's very important. I think it's a good point, a good place to ask the governments all over the world to measure better this impact they're supposed to create.
Yep, indeed. So let's take advantage of such a situation to do something better than usual. I think that we really finished the time we have at our disposal today. But again, we will follow up with all the participants. Thank you so much, Natalia and Pedro, for explaining what is going on in your countries with your organization. And yeah, maybe I mentioned before giving the floor to Carolina to conclude, you will receive a follow-up email immediately after this webinar, in which you can find the link to download our guide, in English and also the version translated in Spanish and Portuguese. So you can access the guide there, and there will be also a short survey, because again we put so much the focus on impact that we would like to understand our limits and also the things that we should do better in order to achieve more impact. And now, without further ado, I give the floor to Carolina that can conclude this webinar. Thank you so much again to all the speakers, and once more thank you to L'Impacto for having translated this guide for the second time. Actually, that's, I mean, you are spreading our content throughout your geography. So thank you, Carolina, the floor is yours.
Thank you again, Alessia, Arnaud, Gianluca, and all the PPA staff, as well to our speakers. It has been an enormous privilege to listen to your insightful experiences from Europe and Latin America. And it is a showcase of how we can strengthen the impact ecosystem across the world, in particular today in Europe and Latin America, to leverage significant social and environmental impact, in particular in the midst of these challenging times that we are living, where we need to be more strategic than ever to make social investments more to achieve greatest impact. I want to reinforce that our network in Latin America meets the same guiding principles of our sister networks in Europe and Asia. And we have a wider mandate, including all range of impact investors, to support the social ecosystem through the continuum of capital, from philanthropic grants to full market rate return impact investment, including talent and intellectual capital. And I would like to invite you to read the Venture Philanthropy Guide, as Alessia mentioned, and as help us with the evaluation of this webinar to continue improving our interactive sessions. Finally, just to remember that on June 10th, we will have our new webinar with EVPA to launch the report Financial for Social Impact, the key role of tailored financing and hybrid finance, that we are translating as well from L'Impacto in Spanish and Portuguese. And this guide provides an overview of how to tailor the financial instruments to the needs of the social purpose organizations by looking pros and cons and how we can improve this kind of financial instruments. So we're looking to continue in touch with you. Thank you. And as Alessia mentioned, we will share the presentation, the recording link of this webinar. And I think the most important is to continue in touch. Here are our emails, is the way how you can contact us at this moment. We will hope to launch our webpage soon in the 3 languages, Spanish, Portuguese, and English. But meanwhile, you can reach through our emails. So thank you very much, Alessia, and all VPA team.
Thank you, and have a great day in LATAM, and have a good evening in Europe. Gracias, Carolina. Really appreciate it. Ciao.
Gracias.
Bye.
Bye. Ciao, ciao.